Juan, and welcome to Market Moves with the Yardi. I'm very excited to share this trade that I took on Friday, August 8th on US30 or the Dow Jones. I'm excited to share this trade because I was working on a couple of things as I entered this trade. I was working on my patience and I was working on my fear of missing out. So I told myself that I was not going to participate in the market until after the market opens at 9:30 Eastern Standard Time. So let's take a look at what happened and how I did with this trade. So after the market opened at 9 o'clock, how do I know it's 9 o'clock? As I hover over the green candle and you look at the bottom, you could see that it says Friday, August 8th, 2025 at 9 a.m. So this candle opened at 9 a.m. and it closed at 10 a.m. Okay. So after this candle closed, I said, "Oh, it formed a pattern that I recognize, a three candlestick pattern that I recognize, and this is a three candlestick pattern here. This three candlestick pattern is called a demand BEC, a demand brother engulfing candle. So as you guys know, if it's a demand brother engulfing candle, I'm looking for buys. So how do I trade this candlestick pattern? You trade it by waiting for price to get back in the equilibrium zone, which is the red candle. Once it enters the zone where the red candle is, you can enter the buy. Your stop loss will be below the engulfing candle, and then your take profit would be a 1-to-1, 1-to-2, or 1-to-3. In this case, my take profit was a 1-to-1. With this indice with US30, you don't need a big move. You just need a small move, for you to make a significant amount of money. So that is why I decided to do a 1-to-1. Okay, so after I saw this candlestick pattern, I said, okay, wait. I have to convince myself to wait because, like I said, I'm working on my patience. So I waited until the candlestick got back to the red section, the price rather got to the red section. My stop loss was even below, way below that green candle, because I know sometimes the market could be evil and take you out and then go into the direction that you had it in. So I said, you know what, not today. So I had my stop loss below that, green candle just to be safe so I don't get stopped out. And my risk to reward ratio was a 1-to-1 because I just need a piece of it. I didn't need the entire thing. Okay, so based on my goal for the day. So let's see what happened. So once again, I'm waiting for the price to get back into the section where the red candle is. My stop loss is below the engulfing green candle, and my risk to reward ratio is 1-to-1. So this candlestick pattern gives you where to enter the trade, where to where your stop loss should be, and you determine your risk to reward ratio. So let's take a look at what happened. As you can see, price definitely went down to the equilibrium section. In fact, it went below. It went to look where it went to another demand zone, right? It went back to this demand zone to retest it because that's where it pushed up from initially. Luckily, I had my stop loss below the engulfing candle, so I didn't get stopped out. Okay. And then price pushed up and hit my take profit. So I was very happy about this trade because, like I said, I was working on my patience and I was working on my fear of missing out, and I was able to accomplish those goals. So I will place the link for G Money YouTube channel where you could get more information on the supply and demand zones when you're using these three candlestick patterns, and you will definitely learn how to enter exit a trade based on these three candlestick patterns. Okay, so thank you for watching, and I hope you learned something, and I'll see you next time.